Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of New York and London sugar markets. Ice raw sugar in New York. The market had, for the most part since mid-January, run along down the underside of the purple highlighted upper time, currently at 21.93, of the early November 2023 to mid-January 2024 bearish shift pitch fork. 4 weeks ago, there had been a strong drive higher over the upper time. The move up failed at the overhead congestion between 23.90 to 24.08. By the end of that week, prices had turned lower. We then had the changeover in late February, and we'd gapped down well into the stratified congestion zones 21.40 to 21.48, 21 even to 21.07, 20.69 to 20.76, at 20.47 and then 20.03, where prices started to get stuck. I said 2 weeks ago, I quote, I would note the role the big red highlighted April 2020 to date uptrend has played in seemingly securing the downside. That's currently at 20.76, end of quote. Well, that bright red uptrend held the market up during the start of March, and we've since seen a move higher, up and out of the stratified congestion zones between 20.47 to 21.48, such that we are today once more tackling the purple upper time and possibly looking to try and fill in the February changeover gap. That would be fine on its own, but we have congestion overhead at 22.35, plus nearby the rising short medium moving average, currently at 22.69. So I'm cautious on any further moves on the top side. That all being said, there is an elegance to any break higher, so I would pay close attention to the purple upper time and the nearby resistances mentioned, because we could easily see a move up to the congestion overhead around 23.90 to 24.08 area, which we saw last in late February. There's just one other thing, and it is a notion. It's not even a recognition, but just a notion. I have a notion that we may see an attempt to have the December 2023 to date action either try to become a double bottom or a possible sideways triangle. There are not enough points constructed to form either of these two, but I would keep a wary eye out for such developments, just in case. Ice, Europe, white sugar in London. The market at the start of March had been wading through stratified levels of support and turning it into resistances above, such that prices had dropped down to below the interesting 625.30 to 602.70 congestion area, and even dipped down below the breached but unbroken support of the purple coloured uptrend, currently at 605.10, dating from October 2022. There was some further congestion below between 590 even to 592.80, which finally held up prices before we saw a move back up 2 weeks ago. Last week we saw prices punch up and close over the upper time, currently at 617.30, of the early November 2023 to late January 2024 bearish shift pitch fork, which is highlighted in bright red on my daily chart. This upper time had kept a lid on the market since its start, and this was not just a breach we saw last week, but a break higher, a daily key reversal up made last Wednesday, and Thursday and Friday being a 2-day descending hawk pattern, a pattern traditionally seen as bullish. Friday was also the second consecutive close over the slowly rising short medium moving average, currently at 636.60. We have even started to try and fill in the mid-February changeover gap, originally 643.5 to 650. That doesn't mean the market's having an easy time rising, as I've already listed some of the resistances that have been broken, and further up we have the 50% Fibonacci line of the January to September 2023 move at 652.20, and the declining medium moving average coming into the frame, currently at 656.30. It's highlighted in mauve on my daily chart. But I will finish up here with roughly the same late question I asked in New York sugar. Is the action since early December last year, is it developing into a double bottom or some sort of wedge or triangle pattern? It is too early to tell us just yet, but it is something to watch out for. Sugar White Premium Spread. It must be close to, if not over, a year here that this chart finds many things are still going on all at the same time. Okay, so I'd previously spoken some while ago now about two big picture items seen here on this weekly chart. We have the recurring big old bullish Andrews pitchfork from 2019 to 2021, highlighted in dark blue on my weekly chart. The market testing down in recent weeks down to the lower time below, currently at 131 3/4, failing to breach it, and last week rising up through all the moving averages and over the 2013 high at 152 3/4. Now I've said this so many times before, and I will keep repeating it here yet again. This pitchfork, despite being breached in the past, still continues to show the overall major bullish angle of attack of this market. In more recent activity, in the last 4 months or so, the market, despite some sterling efforts, had become somewhat trapped between overhead congestion at 152 3/4 to 155 even, congestion below between 128 3/4 and 134 1/4. However, last week saw a strong move up and out of these doldrums, enough that we are now looking at testing the overhead congestion between 162 3/4 and 164 3/4. That contains a rising neckline extension of the June 2021 to May 2022 reverse head and shoulders bottom, currently at 163 3/4 and the 2012 high at 164 3/4. There is further congestion between 173 3/4 and 175 even. Finally, there is the elephant in the room, the big February 2022 to August 2023 diamond top pattern, highlighted in green on my daily chart. There is still no resolution higher or lower to this pattern, so I would suggest patience in this until we can see a significant move in either direction. And by significant, I mean beyond the September 2023 high at 171 3/4 or below the October 2023 low at 115 3/4. Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Service International Limited. And here comes the final important bit.